So today we're going to be doing backtesting. We're going to be going through, backtesting. What is backtesting and how to utilize backtesting for your trading. Now, to just give a little background. Now, when it comes to, backtesting, right? Backtesting basically it's you as a trader going through data, trying to gather data, gather information, and to verify the efficacy of your strategy to inform how you implement that strategy in your trade. So in other words, you're taking historical data, you have a strategy first, you take that strategy and implement that strategy on historical data to verify that the strategy you have actually works, and then utilize that to enhance your trading. Now, for the purposes of our free mentorship, we're going to be using the TradingView platform because it's free and you don't have to pay anything. There's this software here, FX Replay, they can actually use also to backtest in real time. However, it's paid of course, but you can try this out for 5 days and then you can utilize that. They also utilize TradingView. But for the purposes of the class, I'm going to be using TradingView to show how we can do that. Right here I have my TradingView open and I have my 15 minutes time frame chart here. I'll just expand that, and then we'll see how we can use this. Now, I already have a lot of things mapped out on this 15 minutes chart. So let's just go back to January, maybe January 1st. So to do that, I'll just click on this replay button here at the top, and then this was December 8:45 p.m. December 30th December. So we just go back there, right? Okay, so here we are. Now, I think to make this a lot more practical, I'll just take out all these drawings I already have. To do that, I'll go here. Okay, I think I need to undo the replay. Okay, so I have all these icons here, as you can see. So what I'm just going to do, I'm just going to highlight everything. I'm just going to put that, that's a long list, no doubt, but I'm just going to highlight everything. I want to hide it so we can start afresh. Okay, so to this guy here. Okay, so I put it on the folder. What should I name that? Let me name that what now? So let me find the name. Let me rename that as January 2023. Right, cool. So we just hide all the drawings by clicking this eye icon, and that should do the trick. Yeah. Okay, what's happening? Here comes this reason. Okay, cool. Yeah, so that has done the trick. So you can see we have no drawings again. We've hidden that. If I want to show it, all I just need to do is come here and click on that, and then it will show me all the drawings that I just hid, right? So that is how to utilize that. But since there's a lot of data, it's freezing my screen. Anyways, let's get going. So I'll hide that again. Okay, so what we're going to be doing is we're going to be backtesting, right? So we're going to start from January 1st. I'll just do, for the purposes of this, I'll be explaining, and then I'll just do this maybe for 1 week, for the first week of January, and then we'll see, what we're able to catch, okay? But of course, in the course, it's going to be more detailed. So let's take the replay button again, and then let's go to, let's go to first. No, January. December 30th, 1 p.m., 6:05. Okay, let's go back in time. Let's go there. All right, so this is basically the naked chart, as you can see, 1 to 15 minutes. Now, all through the course, I've been explaining, how to carry out your multi-time frame analysis. We've gone through supply and demand. We've gone through, how to map out market structure. So this is, so basically we've built a foundation, and now we want to take all of that information, all of that knowledge on, and apply that on historical data to sort of verify if the strategy we have or the strategy we've learned about, if it actually works. And then that would help us to build confidence, going forward to forward test that data and apply that in the real market. Okay. So now, as you can, if you look at where I have the cursor, this is 30th of December, 2022, 6:30 p.m. Now, of course, we're not going to be awake, right? We're not going to be trading market by this time based on how we trade, London session and then, the New York session by 5 p.m. UTC +1, basically, charts are closed, and then we're not looking for any opportunity. We're not trying to trade the market. So by this time already, I'll be fast, gone from the market. So let's just do our market structure. So starting on the 4-hour. So basically, this is what we have on the 4-hour. So let's try to see if we can identify, what is happening here. So clearly, you can see on the 4-hour that this is, a high, low. You have here this sort of wicked, not really happening. They didn't take that out. Sort of, pull back, and then we had, this move, and then a pullback here. All this internal movement. And then we had this, and then we had a pullback, and then basically we're here, right? Okay, so this is it. So we can see that clearly the market is trending bullish, right? So we understand this perfectly. So that's it. let's just draw some structure here. So if I pull out this and I take this high and I draw, you know, from the wick of the candle to the body of this candle, and I pull out my tool and I say boss 4R. I've already named this. You're familiar with this already. If you're not, if you skipped to this video, maybe you need to watch previous videos to understand all of this. So, but this is clearly our 4R boss, right? Now, this is our 4R boss. Where was the lowest point that actually, you know, momentum came in and took out this previous high? This was the lowest point, right? We can just use this measuring tool here to do that, to just, you know, draw this from this breaker structure point to the lowest price action. And you can see that this is the lowest price. So we can just take our tool here and I'll put that here. Cool. And then I'll name that's my 4R low, right? So I have that in place. Not just my 4R low, sorry, that's my 4R swing low, right? So I have that color there. Then this, of course, is going to be, and also we're just going to map this high that was sticking out. So we have that, and then what else? It continues, right? I can just continue to draw that again and again. So from here again, we had, you know, so price basically broke this high, you know, made a high here and then pull back a little bit, right? So and then broke structure again. So we can continue to just draw that on and on, right? So here this will now become my new low, right? So we can just continue to draw that. Okay. So we have that. Then what else? Then I can just take, well, we can take this whole movement here, has one swing, has, you know, one leg basically. So I'll just draw my high from this guy here to this. Okay. So now also pull out this. Okay. So that's a new high there. So what else? So we know that this was the high that was sticking out to make this new high here. So we have, you know, a low here, and then this, you know, was sticking out. This move here took out this high. So this was the low around here. So we can decide to draw this as our low, our swing low. I can recognize that as my swing low, right? I also need to add this tool. Sorry, circle to this guy here. Okay, so I know that that's my swing range. Okay, so I'm within this range here to this low to this high that was sticking out. So we're actually here at this time. So based on this, you can see that already we have, you know, a clear market structure. So we know that we're trending bullish, and then this is basically you know, where we're at the market, and this is 3 p.m. on the 30th of December. So want to move this to the 1st of January, so we can basically begin to test you know, what we have, begin to test our strategy in the market. Okay, so to do that, I'll just move this to, let's say 7 p.m., 11 p.m., okay, 3 a.m. Monday. So with this now, I'll just go down to my 15 minutes, right? So let me go down to the 15 minutes time frame. We know where we're at in the market, so we have all of that information. So now on the 15 minutes time frame, okay, you can see nothing is showing here from the 4R. So just to help with drawing the 15 minute structure, I'm just going to make some of this to show. Let me just take, I'm just going to make this to show on the 15 minutes. So visibility, show on the 15 minutes. Cool. I'm going to take it out later. The same thing also with this. So sorry, this should be a 4R low. Where do I have that? My high and low on the 4R. Cool. So that should be, yeah, that should be visible on the 15 minutes too. I want to see that. And then what else? Then this should be my high. This should be my high after the breaker structure, right? Yeah, on the 4R. So to make sure that that is also selected. 4R high. Where do we have it? Okay, so cool. So we have that. So I guess this should be sufficient for me to draw my structure. So I know my range is between this guy and this guy here. I can also put my PD array, premium discount array, just to also guide me. For the 4R, I can just choose that PD 4R, and I know that this is it. So down to the 15 minutes. Okay, so in the 15 minutes, if we just sort of zoom this, we can see here that this was our big breaker structure on the 4R, right? As you can see that. So I can decide to hide that from the 15 minutes. So I can draw my 15 minute structure. Yeah, so cool. So this was the high that was made before, you know, the pullback started. This was the 4R low. So we have all of that in place. Now we need to draw the 15 minutes structure. Okay, so starting from this, sorry. So basically here we can see that we have, you know, this high here that actually on the 4R, this, you know, this wasn't a break of structure, but on the 15 minutes you can see that clearly that was some sort of break of structure. It broke the high, right? It took out basically this high, right? So you had this move here and then a pullback and then, you know, move up. So if you just draw this, let's just draw a structure on the 15 minutes so that the body of this candle here, you can see that's the 15-minute break of structure. So this was the low, and then this low basically sort of was, you know, taken out by this move down here. But then you can see that was more like a liquidity grab, yeah. And then the price, you know, moved up again and then returned and then took out that low. So we can draw this because this helps us to understand what's happening in the 15 minutes. Okay, so this is all about structure, and if you've actually gone through the previous videos, I believe this should make some sense, right? So yeah, okay, so we can also draw this. So we made the low here, this move here made the low, okay, and then this low was taken out by this candle here, okay? So evidently we can see on the 15 minutes that on the 4 hour we know we're bullish, but on the 15 minutes we can see some sort of pullback, okay? And this high is still holding. So if I draw this, taking this measuring tool here, so you can see that this push here, this candle here that took out this low, the highest point was actually from here, right? So we know that this is, you know, our high. So we can actually draw that on the 15 minutes. So we know that that's our high in the 15 minutes. So we can draw that and also identify that properly. So that's our high on the 15 minutes. So based on this market structure, we can see that the market structure or price is now trending bearish, right? At least from here. This is the 15 minutes of, sorry, the 15th of December. That's a long time away from where we're supposed to be anyway. So, but we know we have that in mind. So we understand, you know, where we are with respect to price. Now, if I just zoom this in, or is it zoom out or whichever one? Anyways, this high is still not taken, so we're here, so we know that this high is still staying strong. If we look at price action, now this was, you know, this high basically took out, you know, the previous high here, and then we had a low, and then this one was taken out by, you know, price pullback, and then took out, you know, the previous high. So that means we now have a new low here, and then this was taken out by this movement here. Let's see, by this candle here, right? I also need to name that as well, boss, 15 minutes. So you can see clearly the 15 minutes is bearish, right? Because this was the price action. Okay, let me just see from here. This, you can see made a high here, took out, and then made another high here. You see that? So what do you see? The 15 minutes is bearish, right? Evidently from price, at least price action here, you can see the 15 minutes is trending bearish. This high, or this high is lower than this high, and then this low is lower than this low, and then this low is lower than this low. So you can see it's trending bearish, right? So we understand that. Now, price pulled up back, didn't take out this high, as you can see, wicked it at this point, and then, you know, also failed to take out this low. So when we draw this, okay, if we're to draw this to this guy here, so you can see that price came wicked it. So that didn't take out that, so we can actually view that as, you know, maybe liquidity sweep. And then if we draw from our, you know, most recent low, and then we draw this here, you can see that that low hasn't been taken, right? Until this guy here, okay? So that's when this low was taken, right? So if we look at price action there, you can see that the highest point that took out this low was actually this guy here, right? So you can see this was the week here, isn't it? So we know that still, if you look at the previous price, the previous high here, you can see that still price hasn't really taken that high by the body, right? So we know that we're still trending bullish, and all of this could just be some, you know, liquidity grab, okay? So you can just draw that across. I'll just draw that across. Now you can see on the 15 minutes, I'm still not yet, I've still not gotten to 30th of December, but I need to understand what's happening in the lower time frame to inform, you know, what we're going to be doing going forward. So with that, at some point here, we now had a break of structure by the body. So that means price has switched bullish, okay? So we had this price switch bullish here. Then we had, you know, you can see all of this, you know, bullish movement. So we can draw all of this. So we had a break of structure here, had a pullback, you know, failed to take out, price failed to take out this high. But if you look at this here, this high that was made was now taken out by price around here, okay? So you can see now we're trending bullish, evidently, right? So price continues to move, but we also know that on the 4 hour, the 4 hour is still trending bullish. The 15 minutes basically will continue to move from bullish, you know, bullish to bearish, and it just continues like that. So we want to get to a point where we're able to now, you know, look for price based on where we're at in the market. So again, so based on this price action here, we know that this was our lowest point, cool, yeah? And we know that this made a high here, and then this high was taken out by this move here, okay? So what then happens? This becomes our low that took out the high, isn't it? And then this high that was made was also now taken out by this candle here. We're getting closer home, and then this then became our low, right? And then what else? And then price, this was the high. That high is here to be taken out, okay? So we now know that based on price action, okay, this was the last high that was taken out by this move here. This was the high that was made, and then this is now our new low on the 15 minutes. So we can put, you know, our tool there, 15-minute swing high. And the same thing, also take that high, and also I should add that to this guy here, the previous high that was taken. So I know based on price action now that this is where we're at. Okay, so this is basically our PD array, okay, on the 15 minutes. So and just put that somewhere. Okay, so now look at this. This is 6:45 a.m. Okay, so we can move the candle to 7 a.m. Now I wouldn't be trading anything between 7 a.m. and 8 a.m. UTC +1 because London opens by 8 a.m. So by 7 a.m. anyways, I'm on the chart, and then I'll map out my structure to see where price is probably potentially going to head to. Now, if I draw my structure based on this swing range that we have here, I can draw this demand zone on this last candle. And we can see that price actually reacted to that demand zone, right? So price tried to take out this high, failed to do so, wicked it, and then returned into the zone, and then moved to take another push to take out the previous high. So I can actually draw this candle too as my zone. Okay, so I'm looking to price, if the bullish trend is going to continue, I'm looking to price to come here and then continue upwards, right? So that's what I'm looking for. Now for that to happen, I'll have to wait, right? Just watch what price is going to do. So let's see what happens. Okay, so 7 a.m. Okay, so cool. 7 a.m. price has returned into this zone. 7:45 a.m. I'm still not gonna, open a position. So what do? I look for the next 15 minutes candle, and what happens after the next 15 minutes candle? You can see this is 8 a.m. So typically, this is what I'm gonna start looking for price action. So to do that, I'm gonna start looking for opportunities. Right now, why will I look for opportunities? A few things. Price made a high, made a low, as you can see here, pull back up. Tried to make a lower low, but failed to do so. Just wicked it, and then at this point, we had a change of character on the 15 minutes. If you look at this, right? So this was a change of character on the 15 minutes, right? That means a high was made, a push down, price made a, tried to pull back up, failed to do so, and then broke structure. So that's a change of character. So with that change of character now, we know that probably price is, now ready to tap into the demand zone and hopefully continue the bullish trend. But that might happen, that may not happen. So let's see what happens, right? So we go to the 15 minutes. Now the expectation is, since price has mitigated this POI, this 15-minute zone, I'm expecting that price is going to now return to take out this high. But a few things also to note. You can see here that this candle here that mitigated this zone actually took out this, this low. That was some sort of liquidity sweep, right? And that also increases, the strength of the zone, because it took out, this basically took out this candle took out the low of the previous candle, and this candle, took out that liquidity residing around there. So we'll go to the 1 minute to see if we can catch an opportunity to continue that bullish trend. Okay. All right. So this was some real, interesting move. Now, mind you, this is January 2nd, right? So this is the holidays, and you can see price action is just funny all over the place, right? So this is the reality of, trading when maybe volume is low, and then the opportunities are not really there. Most people are just returning from holidays and all of that. So sincerely, looking at this price action, I wouldn't really trade anything on the 2nd of January. So let's just move forward, and let's see if, we can actually catch something some other day, because this is the 1st of January. I'm just sorry, a lot of there's really no liquidity in the market, so I wouldn't really trade this. So let's just go to 3rd January, still not, maybe 4th January, right? Let's see. So this is 2nd, okay, 3rd. Let's take this to the 4th of January. But I want to believe, yeah. So the 4th of January, so let's take the 4th of January. So I want to believe anyways that, excuse me, that, the mapping of the structure anyways has been beneficial, so you understand how, to map market structure, and then just understand where you're at. So now with this, we've actually left, this zone where we were previously. So let's look at price action. Let's go to the 4-hour and see where we're at with respect to the 4-hour. Okay, so on the 4-hour, we can see here, obviously, price has taken out our swing 4-hour low, right? So we can just adjust that. Okay, so we can adjust that, right? So with this now, we know that this is now the 4-hour has changed, bearish, or has switched bearish, right? So we can now, with this break of structure, this was the highest point that took out, this break of structure. I basically wouldn't consider this large wick here. And then, so this is going to be, our previous high, right? That has taken out this low. And then what do we expect after a break of structure? We expect a pullback, right? So we expect that price is going to pull back and then continue downwards. Okay. So we have a few reaction zones here. We expect that price will react to this zone on the 4-hour. Okay, now this is a large, imbalance here. So price might as well just come into this, imbalance and then continue downwards, or, come up here before continuing downwards, but who knows? We just follow price action. So this is what we are. So we now know that the price price action on the 4 hour has officially switched bullish. So we know that we're bullish on, sorry, bearish rather. So we know we're bearish on the 4 hour. So let's return to the 15 minutes and let's also draw, our respective zones on the 15 minutes. So that was where we were at before. So this was the low that was sticking out. So we had this was sticking out, right? So we also know the 15 minutes is also the swing 15 minutes price action is also bearish, right? So we have this. So we know that we're here. So if we draw our 15 minutes high, I'll still maintain this guy here. Okay. So I'll just take out this just so that it doesn't cause a lot of confusion. So we have that. Our low is going to be around here. Okay. So guys, this is the real work of drawing market structure, right? And understanding price and where you are versus to price. At the end of the day, when you do this, of course, you already have this in your chart. This is because we're doing it from scratch, so we're having to make sure we understand and map out everything. But when you do this, you always would have this on your chart. Of course, you always make sure you save and you set to auto save, so it always saves for you. So the next day when you come up, when you come on the chart, you don't have to draw this again. You just start from where you were and you just continue that way. Okay, so we have this. Now we know that this is our low, and then we have some price action going on here. Now with this, we also know that this is where our swing high is on the 15 minutes. So the 15 minute swing high, what do I have? Yeah. So that 15 minute swing high, this is our 15 minute swing low. Okay. So we know that this is basically a very large range. Okay. So now let's zoom in to price action and see what's really happening here. So now we have here, this was price, literally just, dropped from here, made a high here, and then a low, and then we had, a little price action here, and you can see that prices are trending, upwards, right? So we have that sort of price action ongoing there. So with this now, we can see that we have changed character, okay? So from the bearish move, price internally is now switching to bullish. So we can draw this to this, and that will be our change of character. Now, some other people may choose something else because you had here, this internal, this white candle that you see here. Some persons may choose this, the tip or the wick of this candle to this body has their own change of character. Well, it all depends, right? But there's a reason for that. It's an internal candle. This simply means that, price sort of moved here, made a low, made a high, before continuing downwards. All these candles, you can see the next candle takes out the low of the previous candle and then all the way down, right? So this here will be the change of character for a lot of people. This can be subjective and depending on how you want to map structure. The most important thing, you always do it the same way. Okay, so we know that we change character here, and then with that, we can draw this last candle down here as a zone, 15 minutes POI. We also have this pullback here, so we can also draw that, okay? And then you can see price actually reacted, right, to that, okay? So we can draw that across, okay? Let me make this is where we're at, so let's just focus on it a little bit, okay? So we have this now. So now this is what? This is 12:45 a.m. So of course, we're on the chart by this time on Wednesday. So let's just forward this and see what we're gonna be by 7 a.m. Okay. So this is 7 a.m. So let's see what we have here. So you can see we had a change of character here. Price pulled back down here, pulled out, and then we now have a new break, not really break of character, change of character, because this high needs to be taken for us to really recognize, this has, anything has a break of structure. So we still have, we're just basically dancing, within this range, right, of this internal price action here. So we are currently here, 7 a.m. So what do we expect by 7 a.m.? We really don't have anything to do at this point. We either expect price to come here, mitigate this before moving forward, or we see something else to give a structure. So let's see what happens. 7 a.m. Okay, cool. So we now have a break of structure, right? This high has been taken up. So 7 a.m. So what do we do? After a break of structure, what do we expect? We expect a pullback, right? A pullback maybe into the zone or into this and then continuation. However, this is not really, I wouldn't consider this a strong zone because it hasn't really, this POI hasn't really done anything. And also the pullback, usually I expect the pullback to be maybe up to 15 pips if I can do something, if I can really recognize that. But it seems we actually have that. So from this candle here to this, like 19 pips, okay. So we can actually draw that. So let me draw that here. But understanding also that price can use this POI as inducement to come back into the zone. So I'll be really reserved, when trying to trade from that zone. So let's continue. So here, 9 a.m. Let's see what happens next. Okay, 9:30 a.m. Okay, price has returned. Hasn't really mitigated this zone, this POI more of. Let me just draw that. Okay. All right, so we're going somewhere. So let's continue. 10.15, 10.45, 11.15. Price is just dancing around. 11.45, 12.15, nothing. Okay, so it seems we have something here. This is 12.30. Okay, now this is a potential reaction zone. Some persons might decide to really take a risky approach and try to look for 1 minute entry to maybe push this higher, but I would really be a little bit conservative and not really be interested in trading from the zone here. So I'll just move 1 p.m. still in the zone. 1:15 since we're seeing some action. Okay, 1:30 since something is happening. Okay, we're still in the zone, so you can see no real reaction from this zone, as it were, right? So 1:45. Okay, seems this candle is sort of pulling out. Okay, 2 p.m. we're still in, right? Now, because we're in here, we can decide to say, okay, based on price action, this is taking out this high. Price has returned into this POI, this internal candle here, because you can see price sort of pulled, broke through, right? Oh, returned, and then before the move. So we can regard this, zone as, the zone or where demand came in and then pushed price higher, right? So we can do that. So now this is around 2 p.m. So let's go to the 1 minute and see if we're going to actually see any price action that we can actually, potentially trade, right? So let's see. Okay, so this is 2:14, all right? Let's see what happens next. 2:16, 17, nothing. Okay, the price seems to be pulling out. 2:23, nothing really. 2:26, 7. Okay, price is pulling out. Do we have anything we can trade from here? Nothing. Okay, let's see what happens. This is 2:36, right? Now let's do something in the 15 minutes. Just a sec. Now, if you look at the 15 minutes here, now this is it. After a change of character, right? After a break of structure, we expect what? A pullback, okay? So if we look at this, you can see here that price, after this break of structure, price started pulling back a little bit and made a low here. So we had, this was a change of character, right? On the 15 minutes, okay? So we had that on the 15 minutes, as you can see, right? Now with this change of character, what do you expect? Because we expect a pullback, this zone here is not really a zone that we feel might be able to stand. So we expect that price is going to pull back a little bit and then maybe, return to mitigate price in this zone here. So for that to happen, we have a change of character. We know that, that move or that momentum came in, from this last candle up and then the push down. So we expect that when price comes in here, we can actually find an opportunity to now short the market and now go down, right? So let's see if that is something we can catch now on the 1 minute. Okay, so here we're at, so here on the 1 minute now, you can see price has mitigated that POI. So what do we need to look out for? We need to see a flip and a chalk, right? So here we have this internal candle here, you can see. So we need to see price react to this, and then we need to see a short position before we can go short, right? If we see one, we take it. If we don't see anyone, we don't take it, right? So let's see what happens next. Okay, so let me just draw this so I can see something here. Look at this guy here, this candle here. Price seems to be reacting to that zone. So let's see. Okay, cool. So we now have a change of character. We now have a flip and a chalk, and let's see how that happened. So we had this move here, right? Pull back, mitigation of our 15 minutes POI, pull back, price pushed up again, returned, failed to take out this low here, pushed up, returned again, failed to take out the low, pushed up, and then what happens? We now have, this low was now taken out after all this rejection. So based on this, we can actually now draw our fib tool here on this last candle, as you can see, yeah. So we can draw that on that last candle, and then we can pull out our tool here and then take our position, 2 pips, yeah, and then 1, 2, 5, okay, maybe 1 to 5, and then we can now see if price returns into this, taps us in, and then continue downwards, hopefully. Okay, now just to recap this, what has happened? We know that on the 15 minutes, price here, coming from, the early mornings, and price actually took out this high after a break of structure. We expect what, a pullback. And then on the 15 minutes, we also know that we already have a change of character. Okay, that tells us that the pullback is starting. And then what next? We drew our zone. After the change of character, we knew the price, momentum came in here, and that's basically what caused the change of character. And now we drew that. Price has returned to mitigate that. Now we've gone down to the 1 minute to look for an opportunity, right, on the 1 minute to trade the pullback. And here you can see on the 1 minute, price basically after mitigating, basically danced around. We had all those rejections and then eventually a break, of this low. So if we were to draw everything here, this low here, okay, I'm just going to put my 1 minute change of character. Okay, so because you can see price, mitigated 15 POI, made a low here, right, before returning and then rejecting before breaking that low. So all of this rejections here, we can call this a failed reaction. Where do I have that? Failed reaction. So we had, a failed reaction. So buy to sell, basically. So demand failed, right? So demand to sell, demand to supply. So demand to supply, sell, failure here. So demand was holding, eventually supply took over and, demand failed. So what do we expect now? We expect the price will return in here and then we get our 5 minutes, 1 to 5, trade. Hopefully it doesn't take out this high because, and why did I draw this? Because this was the last candle up before the push down, okay? And that's why. Now, if I want to be conservative, usually maybe I'll cover this guy, or even eventually maybe just even cover this last candle here, and that will be conservative, of course, but that will mean I'll get less, return on the trade. However, I know that if price, for example, just tries to grab liquidity and sweeps this high, then I can be safe, if this doesn't, if this high is not taken out, right? But now a few things that you also, that to add confluence to this zone here, you have here liquidity. So you can see that this candle basically swept this high, yeah, and then pull back, and then eventually the supply zone. Now because this is a sweep zone, this candle swept this liquidity here, so this becomes a sweep zone. So you can see this sweep zone sort of held, and it was from this sweep zone that price pushed down. So that gives me additional confluence to say, okay, this is actually going to hold because there was a sweep of liquidity that led eventually, a price reacted to that led eventually to the change of character. So I believe that shouldn't be taken out. Okay, so I can even put that maybe like 1 to 4, right? And maybe get 1 to 4, or I can say, hey, I trust my zone, and then price is hopefully not going to take me out, and I'm going to get that. Now, also to explain, to also add something to this. Now, sometimes using this sweep tool, price might actually just come here. Let's look at this. Might just return here and then just continue downwards and may not tap me in, right? But you have to come to a point where you have to accept what you're willing to live with. Do you want to sort of stick to maybe a 2 pips and then price might actually come here and then go without tagging you in, or do you want to actually just put your whatever here and get a low risk to reward, but at the same time you know that you got something, right? So you have to choose based on gathering data, and that is one of the reasons why you have to backtest and decide what really works for you. What do you want to live with? And then for me, I think this is okay. So let's see what happens. Let's play this. Okay, already tapped in, right? So you can see price taps in. Hopefully we're not taken out. Okay, cool, we're out. Okay, cool. Yep, and that is it. So here we go, 1 to 5, right? We got tapped in around 2:50 p.m. and then by 3 p.m. we're out 10 minutes, right? And then 1 to 5, cool, 1 to 5. If you risk $1,000, you made $5,000. If you risk $2,000, you made $10,000. If you risk $5,000, you made, $25,000. And then it goes on and on like that, okay? What did I just say? 25, yeah, 5 to 5, yeah? Yeah, 1 to 5, okay? So basically that is it. So this will be our first trade for, what now? For the, for the year, okay? So this is 4th of January. And then looking at this now, if you look at this and you say, okay, you want to be more conservative, you place this above this high here, the sweep zone, to 2.5 pips, and then you drag this to your 1.5. Do we get that? Yeah, also get that, okay? 2.5 pips, and then your 1 to 5 right in the bag, okay? So this is it. So that means we've gotten our first trade for the year, and then what else? Now the expectation, of course, is that price, remember this is a counter trend price action, right? And what this simply means is that price can decide to just, pull back and then continue to move upwards. So this was a quick one, right? To just catch, based on price action market structure, we're able to catch our quick 1 to 5 after building all of this, multi-time frame story. Okay. So what next now? We need to now see if price is going to take out this low, and then maybe we trade a continuation pullback, or if this is going to, return to take out this high, and then we look to see what price is going to do next. So let's continue to play this out. 3 p.m. Okay. Price has returned. You can even see it has returned to where we entered in the 1 minute already. So let's see what happens. 3:30 p.m., 4 p.m. Okay, same price has wicked our previous high. That seems to be a liquidity grab, and then just taking out this. So you can actually see this way. That's more like a liquidity grab. Okay. Now, depending on how also you trade, you can just say, hey, after I get my first trade for the day, if it's a win, I'm done. I close the chart and I return tomorrow, right? Because if you stay in the market, sometimes you just begin to see things you shouldn't be looking at. And then before you know it, you're over trading and then you can be caught off guard. But let's see what happens, right? So we have a sweep zone there. Let's see what happens in price action. Okay, going downwards, nothing. What's by time? This 4:45 p.m. By 5 p.m. I'm done, right? I'm looking for price, looking for anything to happen. But here we have this mitigation. Let's see if it's something that we can catch something. For 5 p.m. time is gone. By 5 p.m. I've closed my chart. It doesn't matter what price does. I'm not trading, okay? And that is it. So we go to the next day and see if we catch another opportunity. And this is basically how, you trade. So let's go 7. Where are we? Let's get it to 7 a.m. Okay, so 7 a.m. and this is where we're at with respect to price. Okay, so here you can see our previous high. This high hasn't been taken. Okay, so and then price pulled back and made this low. This demand zone is still unmitigated, and let's see what is price reacting to here. We basically don't have any major demand zone that we can map price to here, right? Even if you look at this candle here, the high of this candle, price hasn't really tapped into that, but we can see that the internal structure has shifted from this bearish internal structure to a bullish internal structure. Okay, so we have this, right, in terms of our structure internally. So now if we look at price action, if we draw this just a week, you can see price actually reacting that there's a bullish. Okay, you can just draw that way. So you can see there's a bullish, order flow sort of that led to this break of structure. So hopefully price respects this and takes out this high, but who knows? Okay, so this is 7 a.m. What do we need to see before we now take an informed decision of what we're going to do for the day, right? So we'd have to wait for price to still give us some confirmation. So this is 8 a.m. Okay, so now we're here 8 a.m. So you can either decide to say, okay, I've seen a break of structure here. Also the internal price action is also bullish. However, because this happened all through Asia session, maybe you want to see a confirmation change of character on the 15 minutes before you take a bullish before you go bullish, right? And that's what also I'm going to do, because it's a new day, so I want to see additional price action before I take any bullish whatever. So let's see what happens. Okay, so now 8:15. Okay, seems price is trying to push down. Okay, so let's see. Okay, what do we have? All right, so now we have here, you can see price push down, took out all the previous the low, Asia low and all, and then now we have a change of character. Okay, so now we know that we have a change of character on the 15 minutes. So let's continue. Let's see if we're going to have price return to mitigate this area here. We can actually draw a zone here. So if this bullish momentum is going to continue, that means price will return here, mitigate this, and then we'll see opportunity to trade this in the direction of the bullish momentum. But let's see what happens. Okay, price hasn't mitigated, hasn't given us anything. So this is 11. Okay, 11:30, 11:45. Okay, now 12:15. Now what do we have here? We can see that price has also changed character here. We can also see that there's a liquidity sweep here on the 15 minutes. Okay, this high is here to be taken out, so price hasn't taken that high. So we can also draw our zone from here, because price came in here, swept liquidity, and then that liquidity led to a change of character. So now what that tells us is that we can now hopefully look for, that means price might be ready to actually come take out or mitigate this zone here, because that's failed to take out this high. So what do? We can draw our zones like this. Okay, now I can draw this to this candle here if I want to be clinical, and then because price came down here, made a high before pushing down, so I can draw this candle, maybe to this white candle too, and this is another zone. Okay, so now this area here potentially might be taken out by price. So what am I looking forward to here now? I've seen a sweep, I've seen a change of character. I'm looking for price to return into the zone, and then hopefully I look for a short position to trade this downwards. Now the whole idea of trading is that you have to stay nimble, right? We started with looking at the bullish order flow, but now we're seeing that price is failing to take out this high, and then we're having sweeps, we're having a bearish order flow. So what do? We don't stick with our bias, we simply just change and then just see if we can get anything. So let's see what happens. Okay, so price hasn't really mitigated this zone, so let's see. Cool, so we have price there. So let's go down to our 1 minute and see if we can catch the bullish move, right? Sorry, the bearish, right? Let's see if we can catch anything. Now remember, we must what? We must stay nimble. That is the whole idea, right, of trading. Now mind you, we have this here. Okay, so let's go back again to 15 minutes. Now a few things here. So on the 15 minutes, first we had a change of character here. So we know that this was the zone that led to the change of character, right? Now we also know that price, made a high, returned, didn't mitigate this zone and tried to make a high but swept liquidity. Price has now returned into the zone. Now if you look at this low here also served as inducement for price to return into the zone, right? And now we're basically around here. Now we expect, of course, that price may return to this zone and continue downwards, which we don't really have a lot of confirmation for, but we have a lot of confirmation for the bullish order flow. So while we expect price to do that, we may as well also look for price to sort of push into the zone, which may happen. But what do? Right? We expect price to do that, okay? And then we're looking out for price to do that. So let's see if we actually catch price moving into the zone. Now look at something that happened here. When price mitigated this zone here that caused the initial shock, we can see here the price made, this low, made a high, made a low, made a high, pull back, and then broke through, right? So if we take out, because this candle here, you can see took out this high, so that was a high that sort of pushed down. So if we draw a zone from this high to this candle here, you can see the price, pushed into the zone, pull back, and then broke structure. So we can actually draw from this last candle down here, right? Expecting that price was actually going to come in here, but you can see price didn't do that and pushed into the zone. Okay, so but what do? We can still draw this as a zone. Now depending on how you're willing to wait for price, right, this may be something that may hold, but if you look at the price action now, because at minimum we always want to get 1 to 5, this is already 2 pips, and then here we have 1 to 4, 1 to 5. Now this, for me, this is not really worth it because price has already returned to mitigate this zone, okay? And price might just, from mitigating the zone, might just crash, and just go against the other direction. So, but taking this might really just be a risk that may happen or may not happen. You can put your entry, of course, here at the digital, or you can put your entry here on the 50%, of the Fibonacci tool. So whichever one, anyways. But this is something that, well, may work out, may not work out, but let's see what happens, right? So 1 to 5. So we just play this candle. Okay, we've mitigated it. Now price can just crash through this, okay? But we know also that because this zone was actually the zone that created the first change of character. Let's look at this. You see here, this zone was actually what created the first change of character that pushed high, even though they didn't take out this high. So price can actually just mitigate this and also continue upwards. So basically we're staying nimble and flexible at the same time. So back to the 1 minute. Let's see. Okay, we're out. Cool. Now, based on price action, right, we may decide to cut a shorter profit because price may not necessarily come here to to give us that 1 to 5 before it continues downward. Recognizing also that on the flip side, we also have a sweep of liquidity on the 15 minutes here in this direction, and price, we also have a bearish order flow that you can see clearly from this, and price might just continue to push downwards. So but let's see what happens. Okay, cool. We have our 1 to 5, right, based on this, and that's just about 112 to 119, and that will be our second trade for the month on the 5th. Okay, now this is a really dicey one because of the funny price action that we have here, but this is how you can see how you can stay nimble based on price action and really just following market structure and catching those important moves. Now with this, price has done this. What do we expect? Mitigated this zone. We expect price to crash, right, based on the the refusal of price of this zone to take out this high. So we expect that price is actually going to crash. So we can also continue to look for sell opportunities to see how we can catch that going downwards. So let's see if we can actually get that now. Okay, nothing. Price is just returning with a lot of momentum. Okay, price seems to be reacting to this zone here. This sell to buy wick. So let's see if we get something. Okay, price has pulled back up. Okay, it's a lot of momentum. All right, so we have price here reacting to this candle, or reacted to this candle, as you can see. Yeah, I'll just take that out. So reacted to this candle before the push down and took out this low. So that's a lot of momentum. I can decide to put my candle here or my entry here again and trade this 1 to 2, right? And see if I catch any position here, any trade here. Okay, so let's see. Oops. So no tag, right? We didn't get any, we didn't get tagged in here, but that's perfectly okay, isn't it? So this is it. So this is basically how you backtest, okay? You map out structure. You can see we took time to map out structure in the 4-hour. You know, going to the 4-hour, we took time to map out our structure. We took time to, you know, identify our POIs, our highs, our lows, and then going to the 15 minutes to build, you know, some intraday, you know, trade idea on how to trade, you know, what we have in front of us, and then how we've been able to catch 2 trades across 2 days. Now we can continue to go on and on, right, to catch more trades, but let me just do one more, and then I think we'll be done with this. So of course, this is Thursday. So we caught a trade on Wednesday. We got a trade today on Thursday. We didn't get tagged in for one, and then let's take this to and see if we're going to get anything. But now, based on this price action, we had a change of character here. We can see here we had, you know, a break of structure, mitigated this zone, sold out, and then break of structure, and hopefully this bearish momentum continues. But mind you, this is just a pullback, and price can just at any time decide to continue the bearish momentum until this low is taken out. This low can be taken out anytime, or this low can still hold, this demand might still hold, and then price will take out, you know, this previous highs. However, we know this is a weak demand because it failed to take out the previous high. So we expect that price might just continue downwards, right? So let's see if that is a theory that holds within the 4th, the same day of this Thursday. So let's do this. Okay, let's explain. Oops. All right, so you can see price just completely sold out, taking out this low officially. You know, we're bearish, of course, but we know it's a pullback. The pullback might just stop here and reverse and continue upwards, or just continue crashing down. Who really knows, right? We just follow price action as much as possible. We react to price, right? We're not predicting price. We just follow price action, follow market structure, and we have an expectation of order flow of what price is going to do. So let's see what happens. Okay, price is just crashing. So 2:30 p.m. Now this is 2:30 p.m. Now we know that this was the area, this was the POI that caused all of this. So price might just react from this and continue upwards, or might even crash down, right? So let's see. But we also know that this POI might also serve as an inducement for price to come into this zone. So that's pretty okay. So this zone has been taken out. Obviously, it didn't hold. So you can just draw this here. Okay, price is almost mitigating this, hasn't mitigated it. Okay. 3.5, we're now in here. Now for me, considering that this was some sort of swing, internal swing on the 15 minutes, when price returns here to this demand zone, I would want to say change of character first before I assume the price is going to continue upwards, right? So until that, I do nothing. So yeah, so let's say in the 15 minutes, price has crashed down, basically. This was, you know, a weak liquidity sweep, and then price crashed down. So all of these POIs have been invalidated. Right, so we can just draw that out. So officially price has crashed, price has taken out our swing. Price has taken out our swing. Let me just take out this. And now we know the price is now officially bearish. Okay, so this is now a high, our swing high, right? So this low has now been taken out. So this becomes our swing high, and we know the price is now officially bearish. So 4:45, by 5 p.m. I'm done for the day. So what else? I just fast forward to the next day. So let's look for one more opportunity. So Friday, the next day, the first week of December, 7 a.m. Cool. So by 7 a.m., I'm on the chart, and then I'm looking at previous price action. All of this have been drawn already, so I'm not drawing this all over. We took time to do this so that this is well detailed. So now with this, we can now draw price action where we're at. What do we know? We know the first off, price sold off, right, from yesterday's price action. The last price, this is liquidity. So the last push, you know, downwards, that we tried to catch this because we had seen, why did we anticipate the sell-off? One, price, we had a change of character. Price tried to take out this high, but failed to do so, swept liquidity. That liquidity sweep led to a change of character. So we anticipated the price was going to return into this zone and then sell off. simply because of price action, right? So we anticipated this, but we got in because of this reaction based on our initial map of exchange of character here, but we didn't catch this sell-off here because we're not tagged in, right? So we know that all of this has happened. What else do we know? We know here, for example, you can see price pull down here, pull back a little bit and then continue downwards. This price action here, we can see swap liquidity and then continue pushing downwards, right? So we see here also that we have some important zones. This was the low that was made. This is our new low, right? We can see this our new low also got to, this candle here, sort of took out that low. So in a way, if we're looking at this, we may consider this also a break of structure and then consider this as our high that actually led to the break of structure for this guy here. So you can take that and draw that as our range that we're going to be considering. It's a small range. Is it really a small range? Let's see. 28 pips. Yeah, it's a small range. But yeah, we know this is our high. This low was taken out by this candle here. So we know that this is our new low. So we can draw that. Okay. I can also use this tool to quickly give me insight as to where I am with respect to price action. Okay, so we know that we have all of this in place. Now on the 4-hour, let's see what we have. So on the 4-hour, we can see that the 4-hour has confirmed to be bearish, right? So boss on the 4-hour is now bearish. So we know our low is going to be here, under the PD array here, and then our high is still here. Okay, so this zone hasn't been mitigated. However, this price action here has moved this last candle up before the push down. Is also a very important zone now because this was the last candle up that facilitated this push that took out this low here. So with this now, we know that on the 4-hour, our 4-hour is bearish, right? So let's see, excuse me. So just add this here. So we also know where we're at. Swing. So now this is our low. This is our high that led to this crash here, and then this was taken out by this move here. This was the highest point. So we have all of that, drawn. So I can just draw this and just to have build a story there. So on the 4-hour also, I know the price made a high here, pull back, and then this was taken out by this candle, which is a change of character on the 4-hour. All right, so guys, I hope this is making sense anyways. This is, of course, based on all that we've been building from the free mentorship class. So the course itself is going to have a lot of detail with respect to how to draw all of this really well, right? So, but let's continue. So we know that this is where we're at with respect to 4-hour. So after a break of structure, what do we expect? We expect a pullback, okay? So we know that the 4-hour can pull back anytime, but we know that predominantly we are bearish. So let's go to the 15 minutes. So on the 15 minutes here, let's see what we have. If we draw a zone here, this was the high. Okay, so we can see that zone held and price reacted to it and led to this change of character. So we can draw a candle here, this buy to sell wick. So buy to sell candle, and draw that zone. So if price comes here, we expect that price will continue pushing downwards. However, price can of course can return to sort of feeling the imbalance we have there. So this is 7 a.m. So let's see what happens. 7:15, 7:30, 7:45, we wicked, that low. 8 a.m. we wicked the low again, and then we haven't taken that low. So what do we expect now for us to sort of trend, to sort of buy, to look for opportunity on the other direction? That's a counter trend. We need to see this high taken out, okay, by the body expectedly. So if I just draw this a 15 minutes chalk, okay, so let's see what happens. All right, this just weaken this guy. Okay, just to weaken it. All right, so we can see by 9 a.m. we wicked this, right? This zone here, and then we've mitigated this zone rather. Now, what do we expect based on order flow, right? We expect, because this low has been taken out by this guy here, we have a bearish order flow. We expect that price will continue downwards. That's our expectation, right? So if we go down to the 1 minute, this is around this is of course around 9 a.m. So let's see what happens, right? So we can go down to the 1 minute and say, can we catch an opportunity to sell off? So what do we have here in the 1 minute? Mitigation, price made a low, made a high, made, low here, and then, we broke that. Now, we can look at this guy here. We can look at this price action here, this low, and see what really happened around here. So let's draw this closely. So you can see the price mitigated our zone, right? Pushed up, returned, failed to break, returned into the zone, and then made a high, and then broke down. So we know that price has switched from the demand has failed, and now supply has taken over. So we can actually draw this, and based on market structure, actually trade the continuation of the trend. Now, mind you, price can continue, or price can simply just take us out and then continue, the pullback. So let's look at this and see if at all we get anything, right? So this is it. Now, just to be sure of how this works, 15 minutes, what we're going to be looking for opportunities there is simple, right? We have here, this low was taken out by this guy. This was the high, a bearish order flow, price returned, reacted to that, continued and took out this guy here. And then we expect that price would pull into this area. And then because this was the last buy to sell candle that took out this low, we will react from there and continue downwards. But mind you, because we already have a break of structure on the 4-hour, after a break of structure, what do we expect? We actually do expect a reversal, a pullback, and this pullback can start anytime. And that is why I'll really be wary of taking this trade, because I can see here a lot of exhaustion. You can see all of these candles here try to take out this high but failed to do that. So even though we have a mitigation here and then price looks like it's going to continue, I'll really not be too disposed to take this trade, because price can actually, this might just be a fake out and then continue the pullback, because we've already had a break of structure. Okay, so but let's see if at all we get stopped out, or if at all we even get tagged in. Okay, so let's see what happens. Okay, we've been tagged in, so you can see quickly we got tagged in, and then price has moved against us. So let's see, maybe our first loss. Yep, and that was it. So that will be our first loss minus 1 hour. So it's not bad, right? We had a lot of thesis to that actually pointed to us taking this trade, and also, of course, the 15 minutes exhaustion here was another reason why I probably wouldn't have taken this trade. Okay, so yeah, so that's it. So with this now, we can just continue to look for structure again. Now with this, I know that I'm not looking for shorts, because this exhaustion here and also this price action here has nullified my short position. So I'll just try to see if we can catch some of the trade. So here we can see now that the change of characters happened, because by this body here, so now we have a change of character. So with this change of character, what do we expect? We expect that price now might be ready to return and take out all this previous high, and then we get the deeper pullback as we anticipate. Okay, so let's draw the next candle. Okay, so we can draw something here, I think. Excuse me, sorry. Okay, so all of this was just a lot of exhaustion here. Not a pretty price action, so we've drawn pull back into the zone here. And yeah, so I might just like to wait and say, hey, instead of just trading after seeing a chalk, I want to see maybe a break of structure again before I can take any position. So let's see what happens, right? This is a 15 minutes POI. Oh no. Okay, all right, so continuing from where we were. Okay, so this is, so clearly we have a change of character in the 15 minutes, right? And then we have price has mitigated the zone, a lot of exhaustion around here. So we expect the price would pull, higher, right? And just, we probably price is now ready to give us that, deeper pullback into, maybe into this areas or this imbalance that we have around here, right? So let's see if we get anything, okay? Now, this is around 10 a.m. Okay, oops. All right, so price has wicked this low here. Now we have price basically has continued. This is basically the bullish and the bearish price action. In other words, this basically was just a liquidity grab that stopped us out initially. So our thesis also was valid, right? But then we had this liquidity grab here that stops us out. That stopped us out initially in our trade, and now this demand zone has failed. So we can draw this guy here as our bearish demand zone. Hopefully price returns and continues downwards, right? So this is the reality of the reality of trading. Okay, so the whole idea is to stay nimble, and that's why we're backtesting this. So this is backtesting market structure, backtesting our entries, and backtesting our POIs, how to identify strong POIs, how to stay nimble and flexible based on price action, and also how to trade off of that knowledge. So let's see what we get with this price action that we have here. Yeah, so let's see. We're going to have a mitigation. So cool. So we have price has mitigated this zone. So expectedly, we'll go to the 1 minute and see if we can actually catch that price action. Let's call that. So we have here, as you can see, price was sort of price pulled here, pulled back, made a high, made a low, made a high, made a low, made a high, mitigated that, and then pulled out almost immediately. And then you can see how price continues to, continue downward move. Now we don't really have any structure here that we can say we want to trade off. However, there's something little here I can actually draw out, as you can see here. Okay, we have this. Now, why is that important, right? This is important because you see price tried to take this out but rejected it, and then made a high, the mitigation. But I wouldn't really trade this because this happened before the mitigation of the 15 minutes POI. So I actually want to see that happen now before I try to look for an opportunity to sell. Okay, so but let's see. We may actually catch something based on price action here, and let's see if that is something we get. Okay, so this 10.57, 10.58. Okay, so now price has pulled back into this zone here. We can see on the 1 minute again. This is also liquidity. Yeah. So let's see what happens. Price pulled out and then continues to dance around. Okay, what do we have? Let's see if we get anything. Okay, do you have anything here? So looking at this, not really interesting so far. Okay, so now look at this here. This was low. You can see price was reacting a lot to this guy. Price reacted, bounced off, and then broke this. So we can actually sort of decide to trade this price action here. Okay, and why we're going to take this? We're going to take this for different reasons. One is that you can see the reaction of price. Price has mitigated 15 POI, and then we can see the bearish order flow seems to be holding. Okay, and then here we have this change of character in the 15 minutes, and then we can sort of trade this. Okay, so this POI here, 1 to 2, and see if we get if we get tagged in. Okay, if price does its thing. Oh, this would be 1 to 5 as always. Okay, all right. So price seems to have gone without tagging us in, and this happened all the time. So you have to decide how you want to enter the market. Do you want to enter, for example, from this candle, this last candle that caused the reaction, and then price pull back? You can see it's a very large area. But if you did this, you'd have probably caught the trade, and then that'll be 1 to 2. So you have to decide what you're willing to live with, and what you're willing to how you're willing to enter the market, right? So, but for me, I should have entered on this last candle, and so I can maximize my risk to reward. And it's okay if I don't catch this trade, I'll always get another one. All right, so that is that. So this is moved. We're not going to chase price. It's 11:30 a.m. already. Let's see if we'll catch another trade for the day. So we know that price has mitigated this zone. Hopefully it continues and gives us another structure, but let's see what happens. Okay, so 11:30, 12:30. Okay, so we have again another breaker structure here, right, on the 15 minutes. Now this simply just tells us that the bearish momentum continues to hold. You can see that it continues to go down and down. So hopefully that continues to hold, and then we see price return in here, maybe, or hopefully rather. Now based on price action, we're not just guessing, right? This is based on price action. So we can see the expectation is that if the market is bearish, it will continue to be bearish. If the market is bullish, it will continue to be bullish. But mind you, the high time frame also tells us that we'll have a break of structure on the high time frame, and at any time price may decide to return bullish, right? So that's it. So let's see what happens. 12:45. This is 1:15. Then continues 1:30, 2 p.m. Whoops. And then 2:30. This is likely a news event, definitely caused this kind of movement. So we just take that out. So now we know that our high has been taken, previous high has been taken. So the market has switched, changed character from bearish to bullish, right? So we have that, but we also know that we have this area here, and as you can see, what happened? Price came here, almost equal highs, and that's a clear, good liquidity, for us. So we just look at that. We need more confirmation. So this is of course after market news, so fundamental news. So we just follow price. So yeah, this high here, is it taken? Nope. So we have sweep of liquidity there. And then now with this sweep of liquidity, we know that the market has been bearish all this while. Price has failed to take out this high. So what do we do next, right? So let's see. After the news, has sort of let's say lost steam, we can now see if we can actually look for an opportunity. So this appears price is sort of pulling back, into or continuing the bearish momentum. So we can actually look for an opportunity, or I will look for an opportunity, when I see this type of price action. Okay, so I can draw this sell to buy wick. This is more like a change of character on the 50 minutes. Now this is of course very subtle. We can draw that. So we'll have this zone. So let's see if price returns into that zone and gives us a sell, right? So we're here. So let's see what we get. So let's see if we can catch an opportunity to sell based on price action here. Now, with price doing this, a few things. You can see here price when pulling out made a low here, and price came into that zone and reacted to it, right? We can see the reaction here. Price came in, reacted before breaking down, right? So we may decide based on this market structure to enter. However, the danger with this is that you may have a situation where price may not respect this, because it was after the change of character based on that buy sell week that we had here, that we had this reversal, right? But because we know price actually moved the market this way, and then we see this kind of pullback, we may decide to actually just risk it and take that entry. So with this, we can decide to this reaction, okay, to this candle here. So we may decide to just draw that across like this. Okay, so indeed, I think based on this price action, I would have already entered, right? So if we put that 2 pips. Okay, so this seems to be why. So let's just use 3 pips, right? We put our entry at the 15%. Yeah, point there, and then standard 1 to 5. But because of price action that we've seen, we may decide to just sell off this price action. We have a very interesting demand zone here. As you can see, price sort of wicked all the lows. Okay, you can see that price wicked all this lows, swept London's low, and then pull back up. So we know the price is sort of price may return to this area in the 1 minute. So we just draw that. So instead of just targeting this 1 to 5 and targeting the liquidity around here, we can decide to target the liquidity more like around here, right? And see what happens. Already we've already been tagged in. So let's see if price actually respect that. And that's it, 1 to 9, as you can see. Okay, so within the first week of January, we caught 3 trades and then we lost 1, all based on price action, following breaking it down from the 4-hour to the 15 minutes and then to the 1 minute, and then catching those opportunities. So this is, I think this is a good place to just draw the curtain. So we've really just gone through, how to break down your chart. I cleared the chart first off. And then drew all the zones on the 4-hour, mapped out all the POIs on the 15 minutes, and you saw how nimble we were with price action, and how flexible we were. That's one of the frameworks anyways in the course itself. So we saw how nimble we were with price action and how we just simply followed price action, and based on price action, we're able to catch, all these opportunities. So guys, this is how you backtest the data. This is how you backtest basically the strategy, and also backtest your knowledge. Of course, there are so many other things in the strategy that will be revealed eventually in the course when it launches. But I think with this, you have a good understanding on how to map out market structure, how to identify your strong POIs, and then how to look for entries, based on market structure. And most importantly, how to stay nimble. You have to be nimble, and that's something I believe that I've been able to demonstrate, in the course of all of this. So guys, I think at this point, I would want to sort of close the curtain, and I really wish you all the best. I'll just say, hey, when the course is, look out for the course. Hopefully you've registered on the waiting list. If you haven't registered on the wait list, please just quickly go to Paruto.com and join the waitlist, so that when the course is launched, you get access to the full course and also the community, where all of this, the strategy is actually broken down in detail. So you really see how this works in in the real market, and also of course, because aside the course, there'll be a community where I'll be sharing more, market breakdowns and all of that. And in addition to that, I'll also be sharing, maybe I'll also be doing live sessions of trading, that you can also join in, and a lot of resources that can really benefit your trading. So guys, all I can just say is, hey, utilize the free knowledge that you have here, practice and practice and practice, develop your strategy, develop the experience, practice this on a demo account, of course, don't just jump into the market, practice this on a demo account, forward test it, back test it, forward test it, and just to sort of solidify your understanding of how this works. And hopefully you also take the course, you also join the community, and I look forward to your success. So thank you guys, and do enjoy your day. Bye-bye.